What if I told you the stock market isn't a gamble? It's a mirror, reflecting not just prices, but your patience, your fear, and your courage. The market doesn't punish you for being slow. It rewards you for being steady. Today, you're not just going to learn how to pick stocks, you're going to discover how to think in a way that wins over time. If you want financial success built on wisdom, behavior, and heart, listen closely. This isn't theory, this is the strategy that triumphs again and again. Imagine a calm, reflective pace, deliberate pauses, a friendly tone with deep conviction. Let's begin with a truth. Many people never truly internalize the market doesn't owe you anything. It gives rewards to those who understand two simple things: value and time. Most people chase trends hoping for quick wins, but the real winners look beyond the noise. They look at fundamentals, clarity, and permanence. You see, the greatest edge in investing isn't technology, speed, or fancy formulas. It's patience. There is no rush to be first. There is great power in being last to panic during turmoil, last to overreact when everyone else is shouting. Pause for a moment and think about that. When markets wobble, emotions surge. When prices fall, fear whispers. But wisdom says, stand your ground when others flee. That's what turns temporary price declines into permanent opportunity. At the heart of mastering the market is this: invest in things that work over long horizons. That doesn't mean being blind to risk. It means deeply understanding what you own, why it matters, and how long you intend to hold it. Every successful investment philosophy I've observed has this in common. They buy quality, they respect fundamentals, they allow time to unlock value. You must ask yourself a question, not once, but daily. If I owned this forever, would I still be proud of this choice? If the answer is yes, rooted in reason, then you avoid the endless shifting that leads to exhaustion and poor decisions. You want to think like an owner, not a speculator. And let's speak about fear. Fear is real, but its power is in how we respond to it. When headlines scream doom, the disciplined investor listens with calm curiosity, not emotion. Fear is not the enemy. Unchallenged fear is. You tame it by preparing, by understanding, and most importantly, by acknowledging that uncertainty is part of every market cycle. Here's another truth: your mindset shapes your results. If you fear loss more than you desire growth, you will never invest boldly enough to win. But if you treat setbacks as lessons, not tragedies, you build resilience, and resilience compounds, compounding. That's the secret sauce most people overlook. Not compounding money, compounding behavior. Consistency, humility, and rationality, repeated over decades, yields outcomes that surprise the impatient. Remember, success in the market is not a sprint. It's a lifetime marathon. Be the investor who stays the course, not the one swayed by every wave. So as you go forward, when you choose where to put your capital, do so with clarity and conscience. Choose businesses with lasting value. Choose patience over panic. Choose purpose over noise. Because real mastery isn't about beating the market this month or this year. It's about being unchanged by the short term and unshaken through time. And when your mindset becomes your strategy, then the market becomes less of a mystery and more of a partner in your financial journey. Patience is not passive waiting, it is active strength. In the world of investing, patience is the quiet force that separates lasting success from temporary luck. Most people believe power comes from speed, from acting first, reacting fastest, or predicting what will happen next. But history teaches a different lesson. Real power belongs to those who can wait, observe, and allow time to do the heavy lifting. The market is designed to test impatience. Prices move every second, headlines change every hour, and emotions rise and fall daily. This constant motion creates the illusion that action is always required, but the truth is most wealth is created during long stretches of doing very little. Patience allows value to mature, just as a tree cannot be forced to grow faster by pulling on its branches. An investment cannot be rushed without damaging its future. When patience is absent, fear takes control. Small declines feel like disasters. Temporary losses feel permanent. This is where many people give up, not because their decisions were wrong, but because their timeline was. The market often punishes the impatient by transferring wealth from those who demand quick results to those who understand delayed rewards. Patience requires trust, not blind trust, but informed trust. Trust in sound judgment, trust in fundamentals, trust that well-chosen businesses, ideas, or strategies will reveal their true value over time. This trust is built through understanding, not hope. When you know why you made a decision, you are far less likely to abandon it when conditions become uncomfortable. There is also a deeper emotional side to patience. Waiting tests identity. It challenges the ego. It forces you to sit with uncertainty without constantly seeking validation. Many people mistake constant activity for intelligence. In reality, restraint is often the higher form of wisdom. Knowing when not to act is just as important as knowing when to act. Time is patience's greatest ally. Time smooths volatility. Time allows earnings to grow, management decisions to compound, and competitive advantages to strengthen. While short-term outcomes are unpredictable, long-term trends are remarkably reliable. Businesses that create real value tend to grow. Economies adapt. Innovation continues. Patience aligns your actions with these enduring forces rather than fighting against them. Patience also protects you from the most dangerous enemy in investing: emotion. Fear and greed thrive in short time frames. When you focus on long-term value, day-to-day fluctuations lose their power over your decisions. You stop reacting and start responding thoughtfully. This emotional distance creates clarity, and clarity leads to better choices. It's important to understand that patience does not mean inaction forever. It means waiting for the right opportunities. It means preparing quietly while others are distracted. When moments of opportunity arrive, often disguised as chaos or pessimism, the patient are ready. They have cash, confidence, and conviction when others have doubt. In life, patience builds character. In markets, it builds wealth. The same principle applies to both. Anything meaningful, trust, mastery, success requires time. Trying to accelerate the process usually leads to shortcuts, and shortcuts often lead to regret. Patience allows progress to be sustainable, not fragile. The greatest advantage patience gives you is peace. Peace of mind is an underrated asset. When you are not constantly worried about short-term movements, you think more clearly, you sleep better, you make decisions aligned with your values instead of your anxieties. This calm perspective becomes a competitive edge because most PLL are operating from stress and urgency. Ultimately, patience is power because it allows compounding to work, not just on money, but on wisdom, discipline, and confidence. Small, correct decisions repeated over long periods produce extraordinary results. The power does not come from dramatic moves, but from steady commitment. Those who master patience stop chasing the market and start letting the market serve them. They understand that wealth is not seized, it is grown, and growth, by its very nature, takes time. Patience is not weakness, it is quiet dominance. Values-based investing begins with a simple but powerful idea. Money is not separate from character. Every investment decision is a reflection of what you believe in, what you trust, and what you are willing to support over the long term. When investing is guided only by excitement or short-term profit, it becomes unstable. But when it is guided by values, it becomes resilient. The market is full of noise, hype, trends, predictions, and fear. Values act as a filter. They help you decide what deserves your attention and what should be ignored, instead of asking, how fast can this grow? Values-based. Investors ask deeper questions. Does this create real value? Is this sustainable? Would I be comfortable owning this through good times and bad? These questions slow the process, but they also strengthen it. At its core, values-based investing is about ownership, not speculation. Ownership means responsibility. It means understanding what you own, how it earns money, and why it exists. When your values align with the underlying purpose of a business, holding through uncertainty becomes easier. You are not just watching a price move. You are supporting a system you believe in. One of the most important values in investing is integrity. Businesses built on honesty, transparency, and trust tend to endure. Short-term gains can be achieved through shortcuts, but long-term success rarely is. Companies that respect customers, treat employees fairly, and manage capital wisely create foundations that compound over time. These qualities may not always show up immediately in stock prices, but they reveal themselves clearly over decades. Another essential value is simplicity. Complexity often hides risk. Values-based investors prefer businesses they can understand, products they use, services they recognize, models that make sense. Understanding creates confidence, and confidence allows patience. When you know how value is created, temporary market fluctuations lose their power to shake your conviction. Discipline is also a value. Sticking to principles when emotions rue and high is difficult, but it is necessary. The market will tempt you to abandon your values during periods of excitement or fear. When prices soar, greed whispers that fundamentals no longer matter. When prices fall, fear suggests that values were naive. Values-based investing requires the strength to say no in both moments. There is also humility in this approach. Values-based investors accept that they cannot predict the future perfectly. Instead of trying to outsmart the market, they focus on aligning with quality and durability. This humility protects against overconfidence, which is often more dangerous than ignorance. Knowing what you don't know keeps you grounded and cautious. Values-based investing extends beyond financial metrics. It considers leadership quality, corporate culture, and long-term vision. Leaders who think beyond the next quarter tend to make decisions that benefit owners over time. Culture shapes behavior, and behavior shapes outcomes. When leadership and culture are aligned with strong values, performance becomes more consistent and trustworthy. This approach also creates emotional stability. When your investments reflect your values, you feel less pressure to react to every headline. You are not chasing approval from the market. You are following a framework that makes sense to you. This alignment reduces anxiety and increases clarity, which leads to better long-term decisions. Importantly, values-based investing is not about perfection. No business is flawless. It is about direction, not purity. It is about choosing companies and strategies that strive to do things the right way more often than not. Over time, this consistency matters. Values-based investing also brings purpose to wealth creation. Money becomes a tool, not a scoreboard. It supports progress, innovation, and stability. When wealth is built through values, it tends to be used more wisely and preserved more carefully. In the end, values-based investing works because it aligns human behavior with long-term success. Markets reward patience, discipline, and integrity, even if not immediately. When your values guide your investments, you are not just building wealth, You are building something that lasts. And in a world full of noise, clarity rooted in values is one of the greatest advantages you can have. Every financial journey begins long before the first investment is made. It begins within. Markets may reward strategy and analysis, but long-term success is shaped by self-awareness, humility, and purpose. Without these inner foundations, even the best financial decisions can collapse under pressure. With them, ordinary decisions can lead to extraordinary outcomes. Self-awareness is the starting point. It means understanding your own temperament, fears, strengths, and limitations. Some people are naturally patient, others are impulsive. Some tolerate volatility, others lose sleep over small fluctuations. There is no universal personality for success, but there is a universal requirement, knowing yourself. When you understand how you react to uncertainty and loss, you can build a strategy that fits your nature instead of fighting against it. Many financial mistakes are not caused by lack of knowledge, but by lack of self-control. People know what they should do, yet emotions override reason in critical moments. Self-awareness helps you recognize these emotional triggers before they take control. It allows you to pause, reflect, and respond thoughtfully rather than react impulsively. This pause, small but powerful, often makes the difference between discipline and regret. Humility is the second pillar. The market has a way of reminding everyone, sooner or later, that certainty is an illusion. No one is right all the time. Accepting this truth keeps arrogance in check and curiosity alive. Humility allows you to learn, adapt, and improve. It protects you from believing your own success stories too deeply and from dismissing risks you don't fully understand. Humility also means accepting randomness. Not every outcome is a result of skill, and not every loss is a failure. Sometimes the market moves for reasons beyond anyone's control. When you accept this, you stop taking outcomes personally. You focus instead on process, on making consistently sound decisions, knowing that results will follow over time. This mindset reduces emotional stress and increases resilience. Purpose gives direction to the journey. Without purpose, financial success can feel empty or unstable. Purpose answers the question, why am I doing this? It transforms money from an end goal into a means of building security, freedom, and contribution. When your financial decisions are connected to a deeper purpose, you are less likely to chase reckless gains or panic during downturns. Purpose also brings patience. When you know what you are working toward, short-term setbacks lose their power to derail you. You are not measuring success daily. You are measuring it across years and decades. This long-term perspective aligns naturally with how wealth is truly built. Purpose anchors you during uncertainty and keeps you grounded when success arrives. The inner journey also requires emotional discipline. Fear and greed are natural, but they must be managed. Self-awareness helps you recognize these emotions. Humility reminds you not to trust them blindly. Purpose tells you when to ignore them altogether. Together, these qualities form a stable internal framework that can withstand external chaos. Another critical aspect of the inner journey is consistency. Markets reward those who show up repeatedly with discipline, not those who make dramatic moves. Consistency is easier when your actions are aligned with your inner values. You are not forcing yourself to follow rules, you are living in harmony with them. This alignment reduces internal conflict and increases confidence. The inner journey also encourages learning. Humble. Investors remain students for life. They read, observe, and reflect. They understand that growth, personal and financial, is ongoing. Self-awareness allows them to identify weaknesses, Purpose motivates them to improve. This continuous learning compounds just as powerfully as money does. Ultimately, financial success without inner growth is fragile. It depends on conditions staying favorable. But success built on self-awareness, humility, and purpose is durable. It adapts, recovers, and endures. It is not shaken by temporary losses or inflated by temporary wins. The market tests everyone. It tests patience, discipline, and belief. Those who focus only on external strategies often fail these tests. Those who invest in the inner journey develop something far more valuable than capital. They develop wisdom. And wisdom once earned compounds for a lifetime.